Part 5.5 is Social Security and Medicare. These are classified under what we call FICA. FICA is the Federal Insurance Contributions Act that was created by FDR way back. It requires employees to pay into Social Security, which is 6.2% at the top there, and Medicare, which is 1.45%. So every paycheck you have 7.65 that comes out of your paycheck that you pay to the government for Social Security and Medicare. The employer also pays a portion as well, but just so you're aware, FICA does come out of all of your paychecks. So Social Security is basically an insurance program through your employer and the government, and it's basically income to you after you retire. FICA, or the Federal Insurance Contributions Act, again, you must pay this when you work at a job. So any job that you get a check for, FICA will be taken out. Social Security number. This is a 9-digit number that was given to you at birth. That's basically your ID. Okay, so it helps identity theft. It helps the government keep records on the amount of taxes you paid into Social Security and Medicare. It's basically your ID number for your entire life. Okay, so we're going to be using the Social Security 6.2% and the Medicare 1.45%. Those rates in a lot of our figuring here. Okay, Medicare that's an insurance program, so like your health insurance for when you're over 65. All right, you will get Medicare, so you have government insurance. So right now, pause the video and go to page 323 in your textbook from Canvas. Then start up the movie again once you're ready to go and look there. So on page 323, okay, we have a table that lists the historical look at Social Security tax. Okay, before there was a separate Medicare tax. Okay, so there you get Social Security and you have Medicare that makes up your FICA. That was just more recently split up in the last 25, 30 years. Okay, but in 1978 you have your Social Security of 6.05%. All right, and your minimum income tax table is $17,700. So what that means is if you earn less than that, you didn't get anything taken out. If you earn more than that, that's where you had your percentages taken out. So all you do here is 17,700 times the Social Security percentage, which is 6.05%. So you have 6.05%. Move it 2 places to the left, which is 0.0605. Multiply that together, and you get $1,070.85. Okay, so you take your dollar amount and multiply it by the percentage. That's how you do Social Security and Medicare. Let's just do a random one here. 1986. 1986 we had 42,000 times 7.15%. Move it 2 places to the left, so 0.0715. That gives you a dollar amount of $3,003. And the last one there, let's do 1990, which is $51,300 times 7.65% as a decimal, 0.0765, gives us a dollar amount of $39,24.45. So $3,924.45. That's how much you would pay per year into Social Security and Medicare back in 1990. Okay? Those percentages, the current percentages, as I mentioned, were 6.2% for Social Security. Medicare is 1.45. Those are 2 numbers that you should know. All right, so make sure those are written down in your notes because you will be using those in your current figures. Okay. Let's look at number 4 on the same page in your textbook. So it says in 1978, Dawn earned $48,000. What was her monthly gross pay? Okay. So Dawn earned $48,000 monthly gross pay. You do 48,000. Her monthly, so divide by 12. That gives you 4,000. In what month did Dawn reach the maximum taxable Social Security income? Okay, well currently it is $17,700. That's your maximum pay right now. So we have in 1978, looking at the table, you get $17,700 equals your max pay. And in what month? Well, that would be May. Right? And how you do that is each month is 4,000. So 4,000, and May is your 5th month. So 4 times 5 gives you $20,000. If you did 4 times 4, that would be 16,000. That's still not at your maximum back in 1978. Okay. How much Social Security tax did Dawn pay in February? So 4,000 is your monthly pay. Okay. And back in 1978, your rate was, again, from the table, 6.05%. So times 0.0605 gives you a monthly of $242. How much Social Security tax did Dawn pay? In May. Okay. So again, our maximum was $17,700. Subtract off your $16,000, okay, for the first 4 months, January, February, March, and April. So you're left over with $1,700. Multiply that by that same decimal, 0.0605. Gives you 102.85. Okay. So again, back in 1978, as soon as you hit that maximum of $17,700, you don't have to pay any more Social Security. Okay, it's obviously a lot higher now, so you typically pay Social Security every paycheck now. All right, but back in 1978, that wasn't the case. How much Social Security did Dawn pay back in November? So as we talked about, May she hit it. So you got June, July, August, September, October, November, December with nothing. So $0 she paid into Social Security back in November because she already hit her maximum. All right, currently your maximum is a lot higher. So back in, like, if you look in your textbook, back in 2016, the maximum was $118,500. Okay, so if you made over $118,000, you didn't have to pay. All right, but you know, a lot of us, normal middle America, we pay in Social Security every month. Number 3, a politician is considering removing the maximum table income and having all income subject to Social Security tax. Why might this be unfair for very affluent people? Okay. The reason why is because, say you make $1 million. Say you make $1 million. Your Social Security was 6.2%. Well, what's 0.62 or 6.2%, which is 0.062? If you multiply that out, 1 million times 0.062 gives you $62,000 paying into Social Security. If you made $10,000 times your 0.062, that gives you only $620. So you can see that the more money you make, if they get rid of that maximum table, the more money you make, you pay way more into Social Security. So that's why it would be unfair for someone who makes a ton more money to pay into Social Security. Number 4, an all-star baseball player earning $25,000 per year plays 162 games per year. If you divide the salary by the number of games, does the baseball player reach this maximum income tax table the first year? So 25 million divided by the games, which is 162. When you do that, you're going to get 154,320.99. Okay. And the answer was, will he reach the maximum income? That answer would be yes. All right, because the maximum income right now is $106,800. So clearly, $154,320.99 is bigger than $106,800. So yes, he would reach his maximum taxable income. All right. So that's it with Section 5.5. Again, remember your FICA, Social Security 6.2, Medicare 1.45. You're going to use those figures. For the year 2020, I just want to add for the year 2020, the maximum taxable income is $137,700 in the year 2020. And those figures change every year. So that is the figure that we are going to be using this year. That's your maximum income. So if I use it for my last example, number 4, 154,320 is still bigger than 137. So the answer would still be yes using our current figures in 2020.